We weren't scheduled until 2 o'clock. You're live. I know we're live. Hey, everybody. Sean Shallis, 10X Real Estate Marketing Coaching. I'm actually here with Rob Bernacki, over a financial advisor and mortgage lender over at Finance of America Mortgage. We're really excited to see you. But first of all, just let me clarify. Today's one of those funky days. I thought it was at 2 o'clock. There's something else out there. It's 2:30. So we just decided to go live and give you as much value as possible. And, I got to tell you, I'm really excited to have this conversation because, Robert, how long ago would we meet?
It's been about maybe 3-4 weeks now.
3-4 weeks, and had that conversation start just so everybody knows, like, I want to prove a point to some people out there that are in our industry, especially because I don't know if you even know this, 4% of our industry, or any sales industry for that matter, are willing to pick up a phone and talk to somebody. They're afraid of confrontation. How did our conversation start?
Started with a cold call. Which I'm very hesitant to pick up and even answer. You left me a great voicemail, and for some reason, I decided to save that voicemail. It was about maybe 2 or 3 weeks before I actually reached back out to you, and I said, I don't know. You know what it is? You gave such a perfect voicemail. I was like, is this a recording? Is this guy a robot? I got to talk to this guy. Is he for real? And we got on the phone, and sure enough, everything that was portrayed in the voicemail was true to be when we spoke on the phone.
So it's funny you say portrayed. I just want to throw this out there. Is no false pretenses here. I called Robert because I had sold another house around the corner, and I said, hey, we sold this house. We sold it in a week at multiple offers. We have a tremendous amount of activity, and we're just wondering if you want to sell your house. And Robert said, yeah, as a matter of fact, I do. And then we got to talking, and when I went out to see him, he said, I'm in the business. I'm a mortgage guy. And I said, great. I said, tell me more about that. So give us a little background on your background in the business, and then on how you got started and why you do what you do.
Yeah, absolutely. So I got into the industry about 15 years ago, 16 years ago, 2005, when I first got in. Green, wet behind the ears. Someone told me I can talk to people about numbers. I was a math guy, and you can make money doing it. I was like, okay, numbers, talking to people. I waited tables. I was a math major. It seemed like the two things lined up together perfectly. So I dove in, and I had a lot of great mentors in the beginning, guys that really showed me the ropes, taught me the industry. And like anything, though, over time, the more I've been in the industry, the more I've learned and evolved. So I started off in like a broker space, very independent, shopping things around to all different lenders, because that's all I knew at the time. Then eventually got into retail. I worked for PNC Bank, Chase Bank for a number of years, and only more recently just got over to Finance of America. A little more independent, but we are a direct lender. So the things I like about what I do is that I'm able to help people and educate people on the home buying process. The mortgage process itself, a mortgage in general, seems to be pretty scary to a lot of folks. Big numbers, biggest financial decision you're making. So I like to think I could write the book Mortgage for Dummies, because I made it really simple for me to learn it. So I like to try to make it really simple for my clients to understand what they're doing. That's probably the biggest joy of what I do. And I've been in it for a while now, and it's gotten to a point where honestly I could say that every day I'm still learning something new, but I'm better at transferring that information now and making it valuable to my clients. And that's awesome. What I really enjoy, man.
So interestingly enough, when we met, we met under the context of, hey, I met a nice girl. I asked her to marry me. I told you what a mistake that was, and then I said, okay, I'm just kidding.
Jenna,
smartest decision I ever made in my life. And I do wish you the best of luck.
Thank you. I appreciate it.
But I also, we also talked about moving on with your life to the next jump, and you said, hey, I want to sell my place. And I said, and I'll be truthful here, just as I was with you. It's you know me well enough at this point. There's no filter.
Yeah.
I'm a Jersey kid through and through.
Hell yeah.
And and I said to you, I go, selling a house for me is just another. It's kind of boring after a while because I've done it like 2,000 times. But selling your house because you're in the industry, and taking that and then showing people how the process works and using you as kind of like the guinea pig, because it benefits you to show people, hey, here's what the process looks like. And when you say to somebody, hey, I know what you're going through, you can actually look back at this and they could say, well, what about when I'm trying to show my place and I'm going to let people in or show them the house? I mean, today's thing is, are they really buyers or are they tire kickers? And, the old joke is, buyers are liars, for the most part. And that was, when I was coming through the ranks, and I was telling Krill, my associate, I said, when we used to get rentals, I would do $300 or $400 a weekend because I would do a rental and I would put people in not my cell phone, not my Palm Pilot, not even my iPad thing. It was basically a calculator that had like a phone book in it that you could type in letters in, and it was like it looked like an HP calculator,
Mm-hmm.
and it was one of the only ones that went sideways, so you could type with big fingers. And I said to him, I go, I could tell you how long ago that was because we didn't have fax machine. We had fax machines, and the listing came in on a fax machine. And you were like, oh shit, you know. So, so let me ask you this: we sold you a bill of goods when I came out to see you, and I said, hey, what our real passion and what we believe in is everybody needs a real estate coach. We also believe that we have a duplicatable, repeatable process that generates results in marketing and the selling of homes, and we try to make it so it's stressless, it's fun, and it's kind of we kind of walk you through the process. And like you were on vacation, you said, oh Sean, what about this or what about that? And I said, just trust the process. Let's just see we're putting a bunch of fishing hooks in the water. We don't know what's going to work yet, but we're going to see which one does work. And one of the things that I always get the question is, how do you know that person is qualified, or how do you know when they're not qualified? And I'm going to give you my piece, because what most people don't understand is, and the way our process works a lot of times is the person will call the homeowner or call an agent, and they'll say, hey, I want to go look at this house. And the homeowner said to me, hey, Sean, just make sure they're qualified before they come in. I don't want the tire kickers coming in my house. Right. So how do we know? And we're listening to certain things, and God bless us. Can we release that? We had a pretty good day today.
I
right?
can release it. Yeah, we had a really good
Right.
day today.
We actually got a contract today. Woohoo! Right. On Robert's Place. And I said to him, I go, and he knew right away because he's in the industry. I said, here's a set of things that are going on with that particular buyer. Even though they have a low down payment, they have all these other things that are emotionally attaching them to this transaction. And Robert said, I get it. I'd rather them be emotionally attached. So what made you, as the seller, not as the mortgage guy, say, hey, listen, I get it. I understand the money for their equity that they're going to put in my house is in their house, and I have to sell that one in order to bring it over here. But what gave you a level of comfort that you kind of knew that would happen?
Well, I mean, it definitely, drawing on the experience I have just from in my job and in my career, where I see transactions all the time. I've done numerous where it's, we close on the sale of one house at 11 a.m. and we purchase the new house at 2 p.m. Something to that effect, right? And it's having been in a situation where I'm kind of monitoring both sides, where I'm even, for my client, I'm talking to their person who's buying their house, their attorney, to make sure all those ducks are in a row, and then talking to my client to make sure his ducks are in a row for his purchase. So I guess my level of comfort with those types of transactions was probably the first thing that disarmed the sale contingency that came along with it. And then also too, to keep the share as I guess private as possible. The goal behind or the reasons why the buyers were looking to purchase the home, for a family, wanting to get in the school district, things like that, just show for me that they're buying it for the right reason. It's not like you're talking about a fly by night. It's like, we've talked about Sean where, who's moving out of mom's basement, and then maybe I might buy, I don't know, but I've been living in mom's basement for 20 years. It might be better just to stay here. And 3 weeks in, they say, you know what? I changed my mind. No, these folks have a motive behind what they're doing. And that definitely helped ease the concerns for me.
Right. There's nothing worse than the deal where the agent tells me they're living at home. They got all the money in the bank. Their mom, they don't have anything to sell. They just had a baby. And I'm thinking, and their mom's doing their laundry. They're scared to death to spend every nickel they have.
Yeah.
And they don't have any expenses, and they're living at their mom's, and they just had a baby and their mom, they need the help of their mom. I wouldn't move out of the house if I had a choice.
Yeah. Unless the mom was my neighbor, maybe that'd be the only exception. But yeah, right.
Right. You might want to go hide. You haven't got there yet. And congratulations to Robert on getting engaged, by the way, but he hasn't figured it out yet. He's going to be looking to hide in my shed when he has his first kid. But at the end of the day, what are some of the things that you'll hear a customer say that sets off your alarm system when you're talking to them? Like if I send you a buyer and the guy says, I'm doing blah, 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 or I have this going on, what are the things that you go, you know what? I think we're going to have to check your credit first before I can really sign off on this.
No, for sure. The things that, the big triggers right now, I'd say more recently is really around income, right? And stability of income. Not necessarily a dollar amount. Not necessarily I want to jump off the first question. How much do you make per year? That's a very forward question right off the
Right.
cuff. But like when you have someone who's talking about, I'm just changing jobs, or I just got my new job. I just got my new things like that. At first, we're gonna say, okay, we have to dive a little deeper. That doesn't mean it's a dead deal, but it's something that's gonna make me think. The other thing I would say too is when they start asking about in terms of assistance for down payment, right? Hey, listen, we have those options. They're there for a reason. Want to definitely explore them. But if you're coming to me about purchasing a home and you're talking about how you're going to rub two nickels together to make it happen, well, we're going to have to do a deeper dive. Doesn't mean that the deal's dead, but these are things that when they come up, concerns about income, variation in income, concerns about down payment money, those are the main
So
things.
let me ask you a question. What if I get a gift from somebody? Can you explain that process to people? I mean, I know how it works, but explain to, I don't think people, I recently did a transaction where, grandma stuck $50,000 in the account, and then they wrote the check and they were like, well, where'd this come from?
No, that's a great question. So like, that's definitely something when I have that alarm go off, as far as when someone says, hey, down payment might be an issue, I do bring it up. Say, no, you are able to get, a gifted funds for your down payment and your closing costs. Simply put, I mean, what it is that you have a family member, immediate family member, who's giving the funds to the person who's going to be buying. And what we do is compose what's called a gift letter. So that gift letter basically spells out to say, hey, this is not a loan. This is not a debt liability. This is me gifting grandma to grandson, mom to son, whatever it may be, funds to help them purchase their home. As long as we have what would say, like I say, a clean money trail, right? We don't have money coming in from all different places at once. We have a check from grandma into, grandson's or granddaughter's checking account. At that point, we have a gift letter signed and we have a clear idea of where the money's coming from. At the end of the day, any lender is just making sure that they can document clearly and cleanly where those funds for down payment, closing costs, or whatever that may be is coming from.
So here's a tricky thing for you. And I've seen this, I haven't seen this in a while, but what is, back in the day, I could have got my daughter a loan for $1 million. I swear to God.
Yeah, you had to check your pulse. Okay, here's
$500,000. We called them ninja loans. I don't know if you're in the business yet.
Oh yeah.
No income, no assets, no job.
No problem.
No problem. Right. And but at the same time, we also had people that were expats or people that were coming into the United States to work here for 3 to 5 years on work visas. They were, they're not voted, they're not able to vote, but they are considered to be a naturalized citizen. So how does, what is the, what happens with those people?
Yeah, so there's definitely, it's going to be vary by what type of visa they have. If it is on a work visa, there are things that are permissible. Now, the one thing I've seen in terms of just running into folks who are new to the country is established credit. That's going to be a piece of it as well. If they're literally first day walking into the country, no established credit, even if they had the work visa and a great income, no credit score, no alternate sources of credit,
right,
that's going to be a tough situation for them. But it doesn't mean, again, doesn't mean it's not doable. We just have to look at
it's just another way. It just has to be done a different way.
Exactly. Now, one thing I want to touch on really quick, Sean, because you mentioned it, the no income, no assets, no job loans. That's what's kind of propelled us into this ability to repay law, that rule. That's one of the biggest things right now that I tell folks.
So explain that for people, because that's it's the ability to repay rule is fairly new.
Yep. So like what that really is about is that we want to make sure that when we're lending out money, bottom line, number one thing, this is one of those end all be all, can be a deal killer, is that you have the ability to repay, meaning your documented income shows a strong enough ratio compared to what your mortgage payment is going to be, that on paper, it shows clearly that you have the ability to repay this mortgage you're taking out. I've run into folks with giant down payments, perfect credit scores, no income on the books, unfortunately, with the ability to repay rule.
So
SOL.
So let's give the ability to repay rule, the AKA of that, right? Which was, and I'm just going to put it here, a no doc loan.
Yep.
Is really what it was. And just for those people out there, and I'll say this, and I know, Robert knows this. Over the years, I've done a lot of mortgage training, and I probably know more about mortgage than most mortgage people in the end that I know of. And it's frightening because I really don't want to know that much about mortgages. Yeah. But in order to get sometimes in order to get a deal worked out or fill a hole or get a hole filled, you need to understand the language. And, so are companies doing no doc loans anymore? And if they are, what kind of rates are we like? Not rate, but more like a down payment programs are they looking at for that?
Yeah. So now there are, to my knowledge, there are still some broker shops, small shops that are out there that are still doing these types of loans, a very limited basis. I know we don't offer anything. The only thing that we have some bank statement loans for self-employed folks. We have some alternate sources of income, but it still has to meet the ability to repay rule.
So what you would call a portfolio loan?
Correct. So like, but the true, like the no doc, no income verifications. From what I know, you're talking about rates typically 1.5 to 2 times what the going market rate is.
So let's just touch on that for a second, just so that I tried to explain this really recently to somebody, and the guy looked at me like I had 4 heads, and I said, when they go to the Jimmy Stewart Bank and they get the money, when you watch It's a Wonderful Life, and they're down to their last dollar, the bank doesn't just lend out money and then after they lend out the last dollar, they close the doors for 30 years and wait to get their money back.
Right.
So they package up the loans. They say that Robert's company says to me, hey, we're going to give you the loan and we're going to put it together, and we may borrow the money from the government, or we may do some other way of doing this, which is, we're going to call commercial mortgage-backed securities, which is a foreign concept to most people in the industry, unless you've been around for about 20 years. And you're going to package it up and you're going to sell it to a company. And when people get upset about the compliance of, right now, I've heard from more customers that, oh my God, they've asked me for that document 16 times. They've asked me for this. They've asked me for that multiple times. And I said, you have to understand, companies like AIG almost went bankrupt, and companies like Lehman Brothers did go bankrupt because they didn't ask for that documentation before. And they packaged up those loans unknowingly or knowingly, whatever you want to call it, that probably shouldn't have been in that bucket.
Yeah.
And then a company like AIG insured it and said, oh no, it's fine, we're going to insure it. And then when it all blew up and went sideways, they weren't able to insure it, and they almost bankrupt the entire country. So we're back now where we're super stringent on the quality of the deal. There's very few secondary markets that companies are selling to other than the United States government. And you mentioned some programs for buyers that can get some help. Other than the Veterans Administration, where they can get a zero down money, or a low income, zero down, or simply pay the points. What other avenues can you get from government subsidized programs other than the urban? What's the other one? It's 100%.
USDA.
USDA, which is
USDA, the property has to qualify, so it has to be zoned and tracked into what they consider a rural area.
In a rural area,
for no down payment. The veteran loans, the no down payment. There are some down payment assistance programs state by state. They are income restricted, and they are a lengthy process. The thing I've seen recently, at least in this past year, is like a lot of my clients, or I shouldn't say a lot, but clients of mine who I've run into that are looking for those options. Just the timing of it is tough because not many sellers are sitting around for 60, 90, 120 days right now in this market. It's just not happening.
Well, you're a seller right now.
Yeah.
You're a seller. You're no longer a mortgage guy. And if I said to you, listen, I have a deal for you, and it's a Nehemiah grant, which, by the way, was a product, and they're going to borrow the money from the Indians, and they're going to give them the money, and then they're going to borrow basically 109% of the money from either the government, friends, or government subsidy, and they're going to buy your house. Okay. Well, how much money do they have out of their pocket? Well, nothing. Well, they've ever bought a house before? Nope. Well, do we have any other options? Well, yeah, we have like 9 other options, and people that have money. Well, okay. Well, why are we looking at that? Well, we wouldn't. But ironically enough, that Nehemiah grant and that product, that property, that loan that I was just talking about, in 2008 and 9, I probably sold 100 properties that use what they call the Acorn grant, which was when Obama came in offers. If you went to a class and you took a class for like 3 weeks, they gave you $30,000 grant. And as long as you kept the property for, I think it was 5 years, and you made the payments, you didn't have to repay the loan.
Right.
And that, honestly, that was a great program, but it ended up where it was severely abused, and there was a lot of creative financing happening at the time, for lack of a better word, which basically killed that transaction. So, all right. So now I have somebody who knocks on my door, and they're going to come and they want to look at my house, and we call them, our company is 10X Real Estate Marketing and Coaching, where we believe that, we want to help you to sell it on your own if you want to do that, but we want to make sure that you're not a vulnerable for sale by owner. And what we mean by that is, let's say for argument's sake, like you said, hey, I have a day job. If you can do this and cover whatever it's going to cost me to do it, I'd much rather have you guys do it. But from a security standpoint, the guy knocks on the door and he says, hey, I want to see your house. I saw the sign out front. What do you think a seller should ask that person before they invite him in?
Well, I mean, the first and simplest question is, well, two things. One, I would say, one, do you have an agent that you're working with, right? I would want to know if you are working with somebody. And two, have you met with a mortgage professional? I mean, I think that's probably one of the most important, because it should be a question where the answer is a quick yes. And I advise all my clients, like, you don't want to put the cart in front of the horse, right? If the numbers don't work, and you don't know what you're able to shop for, I mean, shoot, I might walk into $1 million house. This looks great. I love it. Oh, I can't afford it, or I can't look at, but it's beautiful, and obviously that scales down accordingly. But no, I think the first question is, do you have a mortgage pre-approval, pre-qualification? At the very least, have you spoken with someone in the mortgage industry?
How long have you been looking? Have you looked at other properties? Are you shopping? Why are you shopping? Where are you coming from? Well, I'm living in my car right now. Well, were you aware that my house is like 900,000? Yeah. Well, I know, but I have an expensive car. It's a Subaru. It's like 10 years old.
All-wheel drive.
It's all-wheel drive. It's all-wheel drive.
Go wrong.
And I could fit in the back. I could actually. It's like a king-size bed back there.
Bigger than you think. Yeah.
So now we get in. They like the property. And what was one of the first things that I said to you when I presented it? What came with the contract, and what is something that you provide your customers so that if they're coming to me guns and blare and they want to buy my house, how do I know they're serious?
Yeah. So it should be accompanied with a pre-approval letter.
Okay.
And here's what I'll say too.
Let me clarify something, because even Krill said to me, what is the definition of a pre-approval versus a pre-qualification?
You took the words right out of my mouth. All right. So yeah. So the way, you may get different interpretations of this. And for me, this is how I've always viewed it. A pre-qualification means we've had a conversation. I think it's like a napkin approval, right? So like, you came to me, you said, Rob, I make, X amount of dollars per year. I have X amount of dollars to put for down payment. I'm looking at a house around this price range. Okay, cool. It sounds like that should work. You're pre-qualified. It's a much more quick transaction. A pre-approval means, first and foremost, the big thing with a pre-approval for me is that I run your credit. Okay, I've taken a look at your credit report. I know what your credit score is. I know what your liabilities are each and every month, in accompaniment with what's going to come with this new mortgage, right? I've gone through the point too where I've actually reviewed a pay stub. I've seen a W-2, or I've seen a tax return, and I've run it through what's called there's automated systems for approval. So typically we're going to do things through one of two. If it's a conventional loan, Fannie Mae, Freddie Mac. So what's good about working with those companies is they're going to be the ones who buying the loans, like Sean was saying, in the secondary market.
So let's clarify something though. Let's assume that everybody has a fourth grade education, especially in real estate. Mm-hmm. Freddie Mac, Fannie Mae, Freddie Mac, FHA, and actually the VA is slightly different, but those companies are government backed and insured loans they're insured by the government, right?
Correct.
The United States, the Veterans Administration does not insure their loan, but they guarantee their loan.
Correct.
Right. And then any other kind of quasi loan, like I'm trying to think of a name of something.
I mean, the USDA, they still do their automated system's a little bit different than the FHA, but it's very similar.
But I'm saying, all those programs are government backed or government approved, so that there's a set of standards on each one of those that if you put a loan in that, and the reason why I'm bringing that up is probably 10 years ago, there was 40 different companies out there that each had their own loan program and each had a quasi loan program. But ultimately, right now, probably 85-90% of the loans end up in one of those buckets at the end of the day.
Yeah. Now you have a servicer, right? So that maybe people are saying, well, wait a minute, my mortgage is with Chase, or my mortgage with Finance of America, or whoever it may be. But ultimately, the debt, the money is purchased off in the secondary market by Fannie Mae, Freddie Mac, typically. So
it has to meet their guidelines.
Exactly.
Anyway.
So when we're doing that initial underwrite, before it even gets to an underwriter's hands, it has to go through one of those providers, right? One of their services basically runs it through and checks, all the pertinent information, the credit score, the income you enter, the savings amount, how much of a down payment, all the criteria for the borrower runs through an automated system, and it comes back pretty quickly and says either approved eligible or ineligible. It's really
or rescore,
right,
or
exactly,
rescore.
or caution, run away, right? I mean, there is one that actually says caution,
grab it and run.
Well, again, so that's like step one. So if I've gotten to that point with a client, I have a pretty good feel. I mean, I've been doing this a long time, so I kind of know what's going to need to go in there and how it's supposed to look when it actually gets to an actual underwriter. But if I can't get you through an automated system, forget me getting you to an underwriter. You're wasting everyone's time, right? So like the automated system with a pre-approval is a really strong thing because, again, it does have to go to an actual underwriter who's going to review it and sign off on all your paperwork. But the automated systems are a real catch-all, in terms of finding out initially up front if this is a prospective buyer or not.
So what happens in the case where that person goes and they're I know what the question was I was trying to remember is, years ago I could have got a guy a loan at a 520 credit score.
Sure.
Right. In the BC market which would have been a C paper. And financial instruments are rated by C paper, D paper, B paper, A paper, AA, AAA, just like bonds on like when you're going to buy a coupon or you're going to buy a bond and or some kind of an investment. What is a decent credit score nowadays and what isn't?
So the Fannie guidelines, they'll go down to a 620. Okay, that's like their fall off. Below 620, really nothing they can do. So I would say, you're put it this way. At a 740 credit score or better, you're getting, whether you have 741 or you have 850, you're going to get creme de la creme pricing. That's kind of like their threshold for like, hey, best offer, right? Above.
So that's AAA paper.
Correct. So then it kind of tiers based on like, usually it's about 20 points. So like 720 to 740 is going to be slightly a bit lower. 700 to 720, 6. So I tell my buyers, like first time buyer, you want to be obviously as close to 740 as possible. I would say above 700, you can still look to get conventional A paper loan. Below 700, depending on your down payment, you may be looking at something in the FHA department, the government.
So let me ask this question: is they come in your office, you talk to them, and they're just shy of 740. Mm-hmm. Is there ways to reestablish their credit or rebalance their debt in order to increase their credit score?
Great question. So, and this is one of the reasons why I always stress to people to come sit down with a mortgage professional before you start house hunting, because yes, you're absolutely right. There's what we have is called the credit rescore. So Finance of America, one of the things we do with our Credit Plus service is that we offer clients an opportunity to kind of run what's called like a what if simulator. Say, okay, we look at your credit report. If we paid off this or we move this around to here, we have a potential to increase your score X amount of points, and that will improve your interest rate by X amount because now you're above that 740, right? So again, reason why I say it's good to get with someone like myself up front and early is because if we catch that now, hey, cool, you're just starting a house hunt. We can start putting the groundwork in place, and so that we know when it comes time to you actually get under contract, your score is going to be where we want it to be, so you get the absolute best. I just did it for a client last month. Exactly. Honestly, we had one that was 709, and she had some credit card debt, but she had some money in the bank, and we worked out a way where we did a lower down payment. This is kind of fear. People I put as big of a down payment as possible. We did a lower down payment and used some of her liquid cash to pay down debt.
Pay down her debt.
Or up better interest rate, even with a lower down payment than she was going to get with the bigger down payment. So yeah.
Well, then she has a lower back end ratio, which for anybody who doesn't know that, can you please explain what the back end ratio when a mortgage lender says, your back end ratio needs to be in the 30-40% of your overall debt? What does that mean?
Sure. So typically, like the magic number is 45%. Anything below 45% of back end ratio is going to be pretty strong through any of the automated underwriting systems. So what that means, your front end ratio is your housing payment. So I'll use kind of simple numbers. Let's just say, for someone who makes, maybe I'm using big numbers, but $10,000 a month, right? Let's just use that as a round number. What we look at is 45%. Okay, so that's $4,500. That $4,500 has to cover their housing payment and any debt liabilities. So now that is going to include car payments, credit card payments, personal loans, student loans, basically anything that's reporting to credit that requires a mandatory monthly payment.
So the
ratio has to be under 45.
What I say to buyers before I even send them to you, I go to if I took out your monthly bank statement, how many of them can I highlight in yellow that are a reoccurring monthly payment?
Right. Yeah.
And they'll say, well, my car payment, my student loan, my insurance. I go, okay. all that gets backed out of the 55%.
Well, insurance doesn't. Insurance is the one that doesn't. So
Right, the
insurance won't
insurance, right?
include that. Yeah, insurance won't get included, but it's really like you said, car payment, credit
Yeah.
card, personal loan. The student loans one, a lot of people are. I don't know.
Any revolving debt.
Yeah, I
Yeah.
didn't revolving up. The student loan one is interesting because a lot of them are in deferment right now. So there's a calculation to kind of figure that piece out, and we work that through as part of the pre-approval as well.
Right.
But yeah, so I mean that's going to be something where when you go into that, sit down with that professional, and you can go through and analyze that report. I can very simply go to each of my clients and say, hey, grab a scratch paper, right? This is how much you make every month. Let's time that by 45%. That's this. Let's take out all the things you have to pay. That's how much payment. It's almost like reverse engineering is how much of a house you qualify for.
Dude, I'll say to somebody, they'll say, I'll get the phone call and they'll say, I just got married. We live in the city. We want to move out to the country. My husband and I have it. My husband has a good job. I stay home with the kids. And I'll say to them, I'll say, okay, great. What does your husband do? Well, he just got a new job. Okay. Is he in the same industry? And they're like, well, why does that matter? He's got a great job. He makes like $100,000. And I'm like, yeah, but if he only makes $100,000 for the past 6 months and he's not in the same industry, Robert's not going to give him a loan because he's got to be in the same industry for 2 years in most cases.
Yeah.
But like if I was going to say, hey, I'm a sales guy and I became the sales manager, or I'm in the car business and all of a sudden they made me the finance guy as opposed to the sales guy, that I can do, or that that you would more than likely approve.
Yeah.
So those people, and then a lot of times I'll say, okay, well, do you have any other debt? No, all our debts are paid. And I'll say, okay, well, and they'll say, well, my husband's kids. So that's always a wild card is when somebody says, I'll give you a great example of this. I had a woman who sold her house. She got divorced, sold the house, had $300,000. Problem was she hadn't worked for 20 years. So she had no income.
Yeah. And
because her settlement said that her kids were out of college, the house, when they sold the house, they took X amount of dollars and they paid all the student loans off as a couple. And then they said, here's what's left. Here's your half. Here's my half, and no alimony.
Yeah.
And the problem is now she had a lot of cash and she goes, listen, I could put 50% down in cash. And I said, yeah, but you don't have an income.
You don't have the ability to repay.
To pay the other $1,500 a month.
Yeah.
She goes, well, no, but I have Social Security or I have this or that. And I says, yeah, but they're not going to accept all of that and by the way, or I'm getting alimony. So how long did I have to be collecting alimony so that for it to count?
So at least 6 months, and it's got to be consistent. So if you get like 1 month, you get 2 months payments, 1 month you get no payment, the next month you get half a payment, then you get 3 payments, that's going to be a problem. It's going to have to be at least 6 consecutive months of basically consistent payments on that
right.
On the alimony or child support.
Anything that we didn't cover that you think is important for people to know, especially in this market?
I just want to stress it again. Like for any of those people that are out there looking to buy, like whether it's, I'd love you to call me, right? That's first and foremost, but get with a mortgage professional because you have to be ready to compete in this market. Going out into this market where houses are flying off at over asking price and moving quickly, you got to be ready to compete.
Let's back up for a second. I actually, when I first talked to you, I talked to you in the morning and I said, hey, I'm going on vacation tomorrow. And you said, okay, great. I'm going on vacation the following week. But I said, listen, I have time to do it today. I can come out and see your house today. If what I say makes sense and you're confident and comfortable, I can get your house sold. Are you ready to do something? You go, yep. As a matter of fact, I am. You go, and you said to me, you go, listen, I'm in the business. You're not scaring me. I said, okay, good. And I came out to see you. And for all intents and purposes, I gave you a sales presentation.
Mm-hmm. And
you said, okay, this makes sense. That's everything you told me on the phone. And even more, I was pleasantly surprised when I saw your house. It's impeccable. Shows, pride of craftsmanship and everything else. And I kind of did the smile and wave, and then I texted you, called my staff, and called in my team of experts. And I think maybe even you were surprised that they did everything while I was actually on my way to Lake George and my family. But I got to imagine from your seat, there was still some questions in your head or some concern. What were the questions that, what gave you the confidence to know that worst case, it's going to be okay?
Well, I guess I'm fortunate in a position where I didn't have to sell, right? I guess that was kind of a part of it as well, just because my own I could stay if I had to stay.
Yep.
Cool, I was going to stay. That's no problem. I'll tell you the thing that really I don't say put me over the edge, but kind of really nudged me in the right direction to feel as far as like confidence goes. Was just that you had multiple approaches. You know, I talked to somebody who hit me with a cold call. Okay, so obviously in the sales industry, I respect the heck out of that. So that's step one. And then the thing you told me about was about how we're going to use internet marketing, how we're going to use pixels, how we're going to use the social media platforms to generate more more interest. And I'm like, all right, so this guy's cold calling me. He's using the internet. He's got the old school technique, the new school technique, truthfully. And that was something that I try to incorporate. I like to think of myself a little bit of an old soul. I'm still a paper and scratch paper and paper file for my customers, just old habits, right? But I know that the same reason why I have a Facebook. I know that this is the new wave, right? To get out there and put up. You can reach thousands and thousands of people on this internet. Where you have thousands of phone calls are going to take you days at a time. So just the fact that you were able to kind of look at all approaches and say, hey, we're going to find the best avenue to get you the most bang for your buck, the success, the end result we're all looking for. We're not going to just make phone calls and hope it works out. We're not going to just post online and hope it works out. We're going to hit it from every different angle, and I think that to me was, again, being in the industry and talking to a slew of different people. That was something that definitely, I'd say, sold me.
Cool.
It made me feel a lot more comfortable about what was going to happen. Now, concerns. I'll just say really quick. The concerns were, is it going to happen? Right? Okay, like it all sounds great until it actually happens. And I'm sitting here, what, 2.5 weeks, and it happens. So yeah. So,
right. And I mean, you had the luxury that it happened around the corner from you too, so you watched that whole episode. But the reason why I asked though is because there's so many people that we go see, and exactly what you just said. We'll tell you, guns a blaring, that hey, we do this, we do this, we do this. And if you've ever been in front of me in a presentation, especially if I get excited, all of a sudden I'm doing this.
Yeah, with your hands. Yeah,
and I'm like, we're gonna do this, we're gonna do this, we're gonna do that, and and you know what? I mean, I can't help it. As much as I joke about it, that selling another house can be boring, I love what I do. I get passionate about it. But I think that you just gave a bunch of people the things to look for, because I kind of look at it as, even if you're in the industry, there's going to be a trigger that's going to go in your head and go, okay, that gives me the comfort to be able to make the decision, or that situation or that particular approach. And I think when when we talk about it, are they buyers, are they liars, are they? I mean, bad things happen to bad people. Good things happen to good. Sometimes bad things happen to good people. But if you prepare yourself and you give it your best shot to, first of all, even if you work with my company on one of our programs where we're helping you to sell it yourself, we're still going to coach you through it, because we take it seriously. We take your personal safety, and we also take your family safety and your equity, because we feel like you earned it, and you're entitled to as much of it as you can get. And then from that step, you should lean on those professionals. And then the next thing that we do, and what we recommend, is, even though they're not the salesperson, see if you go align yourself. There's a lot of mortgage guys out there that will call for sale by owner, or call somebody and say, hey, I just want to let you know, I noticed you're selling your house. I want to be able to help you if you need it. You should lean on those people, or try to align yourself with somebody like Robert. Call them up and say, hey, my sister, brother, cousin is selling their house, and I want to make sure they're safe, and I want to make sure that the people that are coming in are qualified. Can you help them?
Yeah. It's like you said. I mean, for me, I can say, clients who are calling me, I do pre-approvals all day. It's the free part of my job, if you will. I'm a resource. I tell my clients, I tell my family, I'm a resource. Use me. I enjoy talking about what I do. I do it all day long. So it's definitely, I have been in a situation where someone comes to me and says, hey, I have a contract on a house and I'm ready to buy it. And we sit down and start to do the pre-approval. The second step, the cart's now in front of the horse.
Yep.
And I can't buy the house. I'm like, oh, I love this house.
Well, great.
Yeah, that's great. But I mean, unfortunately, it's just not in the cards for you, and so it's really important to vet that process, but also too, when you're talking about, meeting different individuals and different professionals, that whether it be the mortgage person, the real estate agent, kind of how, I was explaining when I met with you, there's a level of comfort that you get when you sit and talk to someone that you can't put a specific note on, or a finger on, or a thumb on. you just have to kind of trust your gut in a sense, right? There is an aspect of that
Right.
where if I'm talking to somebody, yeah, listen, they're going to have to prove what they're talking about ultimately, that's for
Right.
sure. But there's a difference when someone's telling you, you can tell when someone's talking to you truthfully, when someone's trying to sell you something, when someone's
Somebody's blowing smoke up your ass.
information. Yeah, exactly. You know where someone's coming from. And I mean, sometimes you kid yourself that you think it's more than what it is because you want to hear what you want to hear. But at the end of the day, that's something I'm grateful for, that, where I was at when I met you, it wasn't a situation where I was like pressed to sell or I got to get out of this house or something like that. So I was able to kind of be more receptive to everything you were saying and make a fair, I say judgment, but a judgment, like, hey, do I want to work with this guy? And then I'm thrilled that I did, because here we are today. And now, aside from selling my house, we're starting to put some things together and work together as well.
I think you hit the nail on the head though before. Probably, I would say over the years, probably 15% or 20% of what I do is I'm the cleanup guy. When it doesn't work, or when they tried to sell it and they couldn't sell it, and they're pissed off at the world and whatever, they call me in and I go in and fix it. Or in a lot of cases, like we do, probably 40% of what I do is probate and estate work, where in many cases there's one family member that loves us and one family member that hates us, and then there's somebody in between.
Yeah.
And every once in a while, even the judge is saying, okay, you got to do this and this, and I'm like, oh, okay. In those situations, and the reason why I bring those out is, you said it a minute ago. You said, hey, get started in the process early on. And people, I've mentored and coached with. I tried to count one day, and I tried to count like the books I've read and everything else. I think the last count was 46 people that I've actually paid more than $5,000 to coach me or mentor me over the past 25 years. And one thing that always resonated was, successful people, and whether you're successful in life or, you're successful, success isn't measured in money. Money isn't everything. It's right up there with oxygen though. Try living without it for a couple of minutes,
It's a good one, yeah.
but the real measure of success is, finding somebody's purpose and, fulfilling that purpose. And one of the things is when somebody gets off track, being able to get back on track. So, really successful when you're starting out and you're just getting started, and somebody takes you off track, you go all of a sudden, you go through the woods and you're all of a sudden four-wheeling in your Subaru, or in your Supra, your little Toyota Supra. And then when you get a little ground under you, and you've been around for like 6 or 7 years, like you or me, I'm a grizzled veteran is what they would call that. You hit a speed bump and you could be doing 100 miles an hour and you hit the speed bump and you go, "Ooh, what the hell was that?" But you keep going.
Yeah.
And I think, having the mortgage person, having the professionals around you early on, if you hit the speed bump, Robert can go, "Hey, you know what? I know you did this in college. Your credit got a little banged up. I don't know if you even knew about this, but this is affecting your credit. It's going to take about 3 months for us to fix it. But once we get it fixed, your credit score is going to go up dramatically, and I'm going to be able to save you X amount of dollars a month in a payment. So why don't you work on that? And then while you're doing that, we're going to send you over to Sean, and he's going to help you to find a place. And I'll let him know that it may take a little bit to get you, get your credit back in the right spot."
Yeah.
So I think, starting early, like anything else.
It's fail to plan to fail, right? It's the old adage, right? So like if you don't go into it with a plan, I mean, you're only setting yourself up for a letdown. I mean, I don't
know if I remember what I said to you when I met you, but I said, if I could show you a plan that's duplicatable, repeatable, and trackable, that would you do business with us? And you went, "Yeah, of course I would." And it's hard to say no to that, because it's kind of like saying, "No, I don't want to have something that you've done already. I don't want to work with somebody who has experience." Of course not.
Yeah. Well, no,
like
that key word there is experience, right? Because I mean, I can tell you, I joke about this. Some first-time buyers, I don't make the joke because I got to tread softly, but some of them I tell them, prepare yourself. Something's going to go wrong. I don't know when it is or what it is, but something's going to go wrong. The good news for you is that I've probably seen not all of it, but almost all of it, so that when those things do come up, we can have a plan to navigate it. I'm grateful to say that there's very few things that shake me where I'm like, I don't have a way to figure this out. I haven't had one of those recently. But that's just the point of having a professional and starting that process and having that rapport and relationship with someone up front, so that I'm not saying I'm going to hold your hand, but I'm going to hold your hand. We're going to walk you through. So
you're on the sell side. You're not on the buy side with me. So when I worked in Hoboken, my standard close was, and bear in mind, when I worked in Hoboken, it was 60% guys, 40% girls, right? And really the model was like, I met a mentor, and my mentor said to me, he watched me do a presentation. I paid a guy who was President Clinton's presentation guy named Ron Arden. And back then he had me do it on a VHS tape. That's how long ago it was, right? And mail it to him. And I get the tape. The tape gets stuck at the UPS place, right? And I get there, and this guy's from South Africa. He's getting ready to fly to South Africa for 6 months. I just got done paying like $3,000 for the flight to his house in Coronado, Florida, or California. I'm sorry, California, right? So we get there, and they go, "Well, did you get the tape?" He goes, "No, I never got it." So I call up UPS, and they go, "Well, it's at the depot." And he goes, "Okay, well, come on, we'll get in the car, and we'll go get it." I get in his car. I don't realize his car has the steering wheel on the other side because he's from South Africa, right? So I'm sitting in the passenger seat, which is now the driver's seat, and he's doing about 85 miles an hour down the freeway in California, and the cars are going like this past me. And I'm like, holy shit. Right? So the guy, we get to the depot, and the guy says, "Oh, I can't give this to you right now because I'm the only guy here." I go, "Well, here." I go, "Did you read today's paper?" So I stick $100 in the newspaper, fold it in half, and I go, "Did you read today's paper?" And the guy goes, "Yeah, I think I'm going to go to the bathroom and read this," because there was a $100 bill. So I said to him, I go, "If you have to go to the bathroom, what do you do?" He goes, "Well, I just lock the door for him." And I go, "Well, don't you have to go to the bathroom?" And he looked at the newspaper, looked at the $100, and goes, "You guys got to step out. I got to go to the bathroom." We get back. He gives us the tape, and we go back to his house. I go to put it in the machine, and the guy is like, at that time he was in his 70s, but I paid him $8,000 for 4 hours, okay, to analyze my presentation. And all I remember him saying was, I go, "How do you get your VHS to work?" He goes, "Don't worry about it. I don't need to look at that." I go, "We just spent an hour and a half going to get this freaking tape. You don't need to look at it." He goes, "I saw your entire presentation. I watched the whole thing." He goes, I know that your personality type. Yeah. And he goes, "How many people in Hoboken or in your market are married?" And I go, "I don't know, like 65% of them." He goes, "What's your closing ratio?" I go, "I don't know, like 64.5%. He goes, "Well, you mean like when they add in the curtains, you're shit out of luck?" I go, "Yep, that's me." But the conversation for that mentality was, "Robert, listen, you guys remember when you got married, right? You're buying your first place. You're going to wake up in the morning with a stomachache, and it's going to hurt. And you're going to swear you're either hungover or you want to commit suicide because you're just so sick." And I said, because you haven't walked down the aisle to get married, you don't understand that feeling, but you do know what it's like to be hungover. I said, tomorrow morning when you wake up, you're going to be hungover. It's called buyer remorse. And you're going to think about it, and you're going to say to yourself, holy cow, I'm writing a check for every nickel I've ever saved in my life. And oh my God, the guy said that I can get it back, but I might not be able to get it back if all this thing goes sideways. Holy shit. I said, if that doesn't scare you, you got another problem. And I don't want you to buy a house because you're going to need that money to go see a therapist. Because anybody in their right mind who's going to write a check for that much money needs to wake up a little funky. Because if you walk down the aisle to get married and you're not even a little bit nervous, you know what? You're either in the perfect marriage or you're shit out of luck and you're just a maniac. Because it just doesn't, that kind of situation doesn't happen. And I mean, the reason why I bring it up to go back to like the presentation and all that, a lot of the people that I dealt with were single guys or women. And when the 30 or 40% that were married, because I wasn't married yet, and because I hadn't gone through that experience, I just didn't know what to even, the woman would be like, "Oh, but I put these curtains on." I'd be like, "Who gives a shit?"
Very delicate approach.
Right. I have a kid, but can't you just park out front and bring the kid in the house? And then until I had a kid and we lived in Jersey City, and all of a sudden I was like, holy crap. Now I get it. Like, do you leave the kid in the car seat and bring your groceries in and worry about somebody stealing your car with your kid in the backseat? Or do you take your kid in the carrier and carry one bag at a time? So you don't think about that stuff until you get to that point in your life. But
so you've lived it. Yeah.
It's been a pleasure. I know we've gone a little while. We've talking for a while now, but because, we started a little off on the time. I just want to make sure that we were able to bring value. Again, the numbers are there. Robert's number direct is 973-800-9875. As always, we really appreciate you coming on, bringing value. We're going to be interviewing him again. This time we'll actually do it at the right time and the right day and the right bat channel. You know how to get a hold of me. You find my information here. We will be pushing this out to people. And if you're thinking about buying, selling, or investing in a home, first of all, go see Sean. Make sure you get pre-approved. Make sure you get your shit together before you come see me, because I'm going to send you back to him anyway. Other than that, Sean, anything you want to leave us with? Any words of wisdom from today's? What is the biggest thing you did after you got noticed that you got your contract today?
I called my fiance, like a good soon-to-be husband would be doing, right?
I was going to ask you that. And what'd she say?
She's like, "Oh my God, really?" I sold it pretty well. I was like, "Yeah, I got some news. Are you sitting down? I got something to tell you." And
Right.
What? You know,
Right.
So it went over really well. So they were really excited.
That's awesome. That's awesome. I'm glad to hear it. You know what? And I can't wait to get you to the next one.
Yeah.
We'll talk to you soon, and we're going to let you run, and we'll talk to you. Have a great day, sir.
Awesome. Thanks, guys. Talk to you soon.
All right. See you now. Bye.